Hello, everybody. Welcome back to another episode of SoFi Weekly. We are here. It is September 29th, 2023, and we've got a lot to discuss in the world of SoFi. Tanner, Tevis, Steve. Tanner, start with you. How are you, buddy?
Doing well. I just noticed right before we went live that you guys look like you're in the same room, and Steve and I look like we're in the same room. Couldn't be more apart, actually. Tevis and I are closest geography-wise, and you and Steve are actually pretty close, but that's kind of funny. But
Steve, how are you doing?
Sorry?
I was just going around. I'm saying, Steve, how are you doing?
It was a long day.
Okay. We're not going to ask about it. Tevis, how are you doing?
I'm fine, man. I didn't buy any stock this week, if that's what you're asking.
No, I was just asking how you're doing. I didn't ask about stocks. But...
Didn't make content this week.
No, didn't you just put out a video like 2 hours ago?
Yeah, I did.
Ooh, I'm going to do a shameless plug real early. I got a video coming out tomorrow that SoFi people are going to love. It's my first piece of real SoFi edited content in like 6 months. So,
what is it about? What's the title?
The history of Anthony Noto. You want to hear the title?
Wow. That's pretty cool.
The history or the title is Anthony J. Noto, daring the odds, winning the game.
Sounds lame as fuck.
I think it sounds very cool. It doesn't sound ChatGPT written, so that's good.
No, of course not. So, all the other alternative titles that I was going to use were ChatGPT made. So, just not that one. What's it called? But yeah, it's more documentary style. I'm going to try to cover a little bit of his history, and I did a lot of deep diving to find some cool information for you guys. So that'll be out tomorrow.
And this is why you are a good role model to society.
Thank you. Didn't you say that I was like an inside trader the other day, and that I'm going to prison?
Did I say that? No, I did not say that.
Wait, hold on. How is someone making a YouTube video a good role model for society? That standard is pretty low, I would argue.
Exactly.
Did you guys hear the news this week about the inside trader who actually went to prison because he was giving stock tips through Xbox Live?
Yeah. This Goldman Sachs guy, right?
Yeah. That was a
Through Xbox Live, though, is pretty creative. Like it's crazy.
Like Morse code, bro. Yeah. I wonder how many years Tanner's going to do in jail for. Because that guy got like what 30 years.
If you ever,
Tanner should get at least 50 for the shit. No, I'm just kidding.
Dude, I am not doing anything. Okay. All right, now let's move on.
Don't. Let's not talk about the chess games we play online and the stuff you show me through the horses when they move to the left. What I need to do in the stock market. Let's not tell people.
I hope the IRS doesn't check our chess.com chat history.
Okay,
dude, it's crazy.
I almost feel like I need to quit this podcast.
Steve, look, okay, you know what's fun? No, I got to get this off my chest. You know what happened this week? This is what happened this week, okay? Article came. No. Let me just say it. It's not that serious. Someone tweeted an article.
Do not talk about it.
Of JP Morgan hiring new wealth management for people who have $6 million. I tagged Steve. I was like, Steve, this is for you. He calls me. Delete the tweet. I'm like, this was like 3 hours later. I'm like, what fucking tweet are you even talking about? He's like,
you don't even use Twitter anymore, Steve.
I saw it come through my feed. I was looking for.
No, he's a little stalker. He doesn't tweet anything, but he just like observes everything. I'm like, it's a fucking joke. I don't even know if you have $6 million. He's like, the IRS will find me. I'm like, what?
I saw this thing on Twitter that like people were like following Jesse Dow or like they doxed him or something.
Yeah, that was actually scary.
So you gotta be careful with that stuff, I meant.
They found his wife and shit, and then they were yeah, I don't know. That was weird.
Yeah.
Well, yeah, I mean, Jesse's been very public, and he's been, yeah, I get that. But I tagged Steve as a joke, and Steve has like 1,000 followers. Jesse has 30,000. So there's
Jesse hasn't even been that public. He doesn't even show his face. He doesn't do anything. I don't know.
Look, man, when you make 800% in a year, people are gonna want to know you a little bit more intimately. That's for sure.
Yeah. Yeah.
Steve doesn't have that problem. Steve doesn't make 800% a year, right, Steve?
Hey,
Okay. You're buying all these dividend stocks. There's no way that's happening.
Yeah, the IRS is not looking at you with your returns. They're more worried about your wife.
She's much better at investing than me.
All right, let's talk about SoFi. What's the first topic?
Did anybody buy this week?
I didn't buy this week.
I bought this week. How did you guys not buy? It got to like 740. You guys didn't buy?
I bought in the $7 ranges. I don't know if it was this week or at the end of last week that I was doing.
It was last week because you said on last week's.
Yeah, that was mainly whenever I was buying. I haven't bought too much this week, but yeah.
I sort of tapped out after last week. I showed Tanner. I'm like, okay, no more in the market. So
guy puts in big numbers.
TJ in the chat, he bought 10,000 shares. TJ, I think, has about 470,000 shares now of
amazing.
SoFi, which is
What is that? His biggest holding?
I think so. Yeah.
Okay.
I mean,
SoFi is?
yeah, 470,000 shares. Yeah, that's
he bought 10K shares this week.
He bought 5,000 shares of Palantir at 14.20 as well. So he got a nice buy last week on that.
Nice. But is he even buying any shares, or is it just all?
No, it's shares. His actual shares.
Okay, cool.
I mean, you bought this week, right?
Yeah, I mean, I didn't buy a lot, but I bought like 20 shares of SoFi. So at 730 or whatever, 740.
Yeah, I increased my position by 1.98% at 744.
Oh, wow. It's not bad.
How many shares do you buy, Steve?
I increased my position by 1.98%.
So how many shares, and then what percentage of your portfolio is SoFi? That's all I need to know.
I actually don't know the set.
Steve's actually going to quit the podcast, bro. Steve's not showing up again. Oh, my gosh.
All right, first topic. I think the first news that came out was Galileo and FedNow. Do we want to talk about that tech platform first?
Sure, yeah. This actually came to as quite a surprise to me, and could be a benefit of Galileo actually being a part of SoFi, being a part of a real bank. Because the only companies that I've seen being able to handle transactions through FedNow are licensed banks. Okay, so Adyen was the first one. Tevis and I just recently did a call about that, so that was exciting. Mm-hmm. And then just recently afterwards, that Galileo is now also going to be able to handle FedNow transactions. So this doesn't mean, some people are getting confused on Twitter thinking that Galileo is the sole payment processor for all things FedNow. Not true at all. What it essentially means is that if there are going to be payments that are routed through FedNow, that Galileo can monitor and process those payments and make sure that people, if they need to get paid out instantly, that's something that we can now offer our clients as well, if they want that. So banks don't actually really want to rush into this because it's not really good for banks, but it's really, really good for clients. So you kind of have to make a judgment call of how nice you want to be and how much that might actually affect you getting new customers.
There's a ton of banks that are already ramped up on FedNow and just leveraging that entire infrastructure. So for Galileo to provide it through their APIs for all of the partner companies that are leveraging Galileo, it's just another tool in their arsenal, right? Like they can leverage.
But which banks are using FedNow right now?
There's a whole list, Tanner. Here, I'll send it to you.
No. There's a list of a bunch of banks that signed up to be allowed to use FedNow. I have not seen any using FedNow.
Okay, hold on. Keep going. I'll try to find it.
Yeah. So here's the concern: is that if you allow someone like TJ, for example, who's in this chat, to take out $500,000 instantly out of his account, and he can do that across multiple accounts all instantaneously, that doesn't leave a lot of time for banks to be able to, potentially sell some collateral in order to have cash to actually make sure that those assets go out on time. So back whenever Silicon Valley Bank was collapsing, at least they had a couple days, between the times of whenever customers were trying to take out their money and whenever the money actually settled and moved, for them to sell off some things, right? If things are moving instantaneously, that makes it that much harder on banks. Okay. And so it's not that clear if banks want to actually use this. From what I've seen, And what I've read is that a lot of banks are signing up for FedNow to receive FedNow payments, but none of them are really signing up to send FedNow payments, because that would be quite a stressor.
So, okay, I'm not sure if it's whether to receive or send, but this is the list that was published by the Federal Reserve on July 20th. I just downloaded the PDF of the early adopter financial institutions. There's about 35 in here. Wells Fargo is one of them.
Give a big zoom in, please.
Sorry. Yeah, so you have a whole bunch of names here on the early adopters list. Adyen is here. And then there's the financial institutions serving as settlement agents and liquidity providers. Similar list as well.
Gotcha. Okay. Yeah. Yeah. No, I heard something like 50 plus signed up before it even went live or something like this, but I haven't seen anything of them actually using it.
Mm-hmm. Yeah.
And who knows? I mean, that might change, but it is definitely going to be hard for them, or harder for them, to do, their traditional businesses that way. Steve, you look really, really confused, or you're playing WoW or something.
I'm reading something actually.
Oh, okay. Okay.
So I was going to ask, so is the news that SoFi is using FedNow? Is that the news?
No. It's just the news that Galileo, if our customers want it, we can process it.
Yeah.
So that's net good for us regardless.
Yeah, because it's like
Galileo's
it's just like
gonna be a
offering
service
something new
provider.
on the menu. It's not taking away from all the old things that we're doing. It's just allowing that if you need options, we have options. And from a Galileo's thing, I don't know if you have it up, Tevis, or if you could get it up, is that we offer every single capability that they need. It's the full suite that we need for businesses, for banks, for customers. We handle it all. So and now it's essentially just a total payment rail. So
this was the post on Reddit. Chris Hager posted this around Galileo being a full service provider for FedNow, providing APIs for both incoming and outgoing instant payments. And then if you actually go to the FedNow site, it highlights how that will work. Galileo will process incoming and outgoing FedNow transactions on behalf of banks, fintechs, and other financial institutions who use FedNow. So this can be used as a standalone service or in conjunction with other Galileo products. So basically, it's another tool in their arsenal that they can leverage for the partner organizations that are on Galileo's stack that want to use FedNow.
Yeah, and if you hit down some of those things there, you'll just see all the capabilities. They're all checked off. They do everything.
Right. The use case is supported here. So B2B, so on and so forth.
I would like to show off something after this about SoFi. I wanted your guys' opinion on this. This was one of the articles that I covered during my FinTech Frenzy the other day. And Steve has been all over this. So, in fact, most of this is stolen from Steve.
Well, is this on FedNow?
Not FedNow, from deposits across banks. I don't have the article up, so I forget the exact number. I'll bring it up in a second. But it was something along the lines of, this was the first period ever since they've been tracking the data since the 1994, I think, that banks have seen across US a decrease in deposits. I think it was a decrease of $874 billion. The first decrease that they've ever seen year over year. And, I have the chart here. This is mainly built from Steve, I think, or some of these are my own ads. But you can kind of see this from Q2 of 2020, which is this column here, to Q2 of 2023, this column here. The year-over-year differences between all these banks is quite stunning. Now, although it says these numbers are in thousands, they're actually in millions. So you can see, like, HSBC has seen a $92 billion decrease, Bank of America $107 billion, JP Morgan $72 billion, just crazy numbers, okay? And whenever you read about the a CFO for JP Morgan, for example, he describes this as being part of quantitative tightening. So if you're taking money out of the system, obviously you're going to have a decrease in deposits. That being said, however, SoFi is seeing none of this, adding $10 billion new year over year. Yes, the percent gain is high, 370% gains year over year, but also we are a brand new bank. But still, the fact that we're still adding on to deposits just in absolute terms is quite unique. They're not the only player doing it. There is other players, but versus the big four, it is quite interesting that SoFi is really, capturing those deposits. Oops.
Do I get to steal the show? Do I finally get to make my jokes and shit?
Baby?
I think this dovetails well with the thing that Chris posted around M2. Maybe I can just bring that up. And
yeah, please do.
It also talks about deposits.
Yeah, Tanner, are you talking about personal savings?
Meaning what? Sorry, that's deposits for their banks.
Okay, Tevis, are you going to bring up the M2 chart, or do you want me to?
I'm bringing up.
Yeah, he's going to do it.
Because I found one for the U.S. personal savings rate also, which correlates to.
So, Chris posted this 2 days ago on Wednesday.
Can you full screen that top chart?
Yeah, I'll bring the charts up. But basically saying that the commercial bank deposits, which are in green over the 2022 and 2023, basically go in lockstep with M2, essentially the money supply in circulation, to say that as money supply drops, the commercial bank deposits drops. And then Chris overlaid the trajectory for SoFi, which has been a straight line up. And now, while this is all positive and it also plays along with the table that Tanner put up, I wonder, and I guess this is the thing that we can discuss is I wonder to what extent this is an outlier because of the infancy of SoFi's bank charter, to say that during this ramp up period, because we only have 1 year of data, not even a full year, right? Like from February all the way to I don't even think we have that much time. As this ramps up, if we're 5 years into this, if we're 10 years into this, of course it's going to start to look more like this, because there's obviously going to be a correlation from how much the macro affects these numbers. But the reason it looks like this today is because SoFi Bank is so much in its nascency, and as a result of that, people are just using it or onboarding onto it for the first time until it plateaus and reaches a level of slower growth.
Yeah, I guess there's two ways of looking at it, right? If you look at it from customers that potentially were not bank customers before, or let's say with the SoFi cash management account, which weren't counted as real deposits, and then we become a bank, they could have massive amounts of savings in those accounts that were zero deposits before that now become 100, 200,000 just in that single user, right? So there is going to be a massive ramp up in the first little bit, but now we're kind of at that point where new deposits are either coming from, people's just paychecks continuing to come in through our existing user base, or new users are coming in. So here's the really exciting part is quarter over quarter, we're still looking at $2 billion or more deposits each quarter. So that's not quite the same as the JP Morgans or the likes of these that are still losing billions of dollars of deposits each quarter. That is still a negative where we're looking at a positive, regardless if we're in our infancy,
Yeah, one of the stats I saw this week is that overall we have lost $1 trillion in deposits. We went from 18.2 trillion to 17 trillion for all commercial banks. The problem is we added so much money via stimulus payments in the United States. So the reason we had that bump of $1 trillion back in 2020 was obviously because of stimulus payments. So that kind of fluttered away. So it's not really that money's leaving the system. The M2 supply stuff makes a lot of sense that Chris tweeted about because the Fed is doing quantitative tightening. So the fact that it's going to SoFi and the bigger banks are still struggling with deposit decline, I think that is the competitive moat of SoFi right now in a high interest rate environment, that 4.5% customer acquisition cost. And I think that can't be understated. The fact that we're going to do $2 billion in deposits at a time where money supply is going down and the big banks aren't, because there's just no reason a sensible person would put their money in JP Morgan getting 0.001%. It's an exciting time to invest in SoFi from that perspective if you're looking for a growth company, because they're growing deposits at a time when they shouldn't.
And I think a couple things, right? One, it makes you realize how much these big banks are not caring about what SoFi is doing because they make
100%.
such a small impact.
Yep.
The $12 billion of deposits is a rounding error. like you probably have more money fleeting out to go into cryptocurrency markets than you do just to SoFi in general. So they really don't care that much.
Mm-hmm.
And in fact, JP Morgan Chase just banned money leaving people's Chase accounts to go to cryptocurrency in the UK. So people were quite surprised by that. But yeah, I don't know. I just find like this is the amazing time for SoFi where we can sort of be still in the shadows. People don't quite know about us yet, and yet there's still so much opportunity to grow because there's not much of a concern from the big players there. But let's say even if they do, I don't know if you guys saw this, that what was his name? Bill Gurley talking about regulatory capture. Did you guys see this?
I love that talk, the 2712 or whatever.
Yeah,
the
2051 or something.
Yeah, that was such a good talk.
Unbelievable. But here's the thing. What do big banks do against SoFi? Is there even anything that they can do from a regulatory standpoint to push us out? Or what could they possibly say to push us out? Because, I mean, we have a bigger and better bank license than Goldman Sachs. You know what I mean? Like how we have the exact same license and regulatory means than, that a JP Morgan does.
You need to clarify what you're saying. What can they say or what can they do?
Well, what could they do? How could they say that we have that we might have unsafe practices or something like this? I mean, they kind of tried that with the cryptocurrency market. They said we were offering new styles of investing in crypto when we said we wouldn't. And I mean, they were right about that. We did back off, but
look, they can say anything they want to say. What they would have to do is build a better mousetrap and have features that compel people to use their service over SoFi's.
Or buy them.
Right?
Like you get so big that you eat up all your competition and capture all the TAM, and that's how monopolies form.
Which I'm still not convinced somebody isn't going to buy SoFi.
Me neither. And I think it's fine if they do. But
I wouldn't be happy about it, but I can see a scenario where my doomsday may be the wrong word, but my unwanted scenario is SoFi goes into one of these RFPs for the tech platform, and one of these large banks actually understands what they do and decides, you know what? Instead of paying them to do our back end, let's just buy them and add all their features into our wheelhouse. I mean, that's a real scenario that could happen.
Look at this. What do you guys think about this? They could influence more analysts to downgrade SoFi.
Yeah, that's an ongoing occurrence that has happened for the past couple of quarters.
It's also a short-term thing. Like if they influence an analyst to downgrade SoFi, it's going to affect the stock. It's not going to affect them crushing.
Yeah, it's not going to affect quarter. It's not going to affect people putting their money there.
Exactly.
And I don't think that it does negatively affect. And I don't really believe too much in that sort of stuff. Like I don't think that's happening too often. But I do think it can influence the real fundamentals of the company, because then they can't actually use their stock to draw from. You know what I mean? They can't quite look for debt from their stock if, for example, it's so sold off because of analyst predictions, which are wrong all the time.
Yeah, I mean, look, I think 2 points, right? I think the Bill Gurley chat was the main takeaway there was that more regulation stifles innovation. Essentially, like you need builders, not regulators, not referees. With regards to SoFi, I think you nailed it, Tanner. They're too small right now to be significant, but it's just a matter of what is that sweet spot, because there's going to come a time where they're not too small to be significant, and then it's going to be too late to buy them, right? So you either buy them now when their deposits are going to be, way smaller than they're going to be a year from now, because in 2 or 3 years, it's a bigger pill to swallow to buy SoFi if it's all of a sudden a $30 billion-dollar company versus right now.
Yeah, and I think like it's just a matter of how much can we be sort of a sleeping giant. You know what I mean? Like how much can we grow within it? And Eddie, Frugal Buck, if I can bring it up, did I show this on the SoFi Weekly already? I know I've talked about it on my show for sure. But he showed off what it would take banks and how it would affect their net incomes if they were to just increase their deposits APY by 1%. Did you guys see this?
No.
This was a really good piece. I'm going to try to find it.
Eddie tweeted it.
Frugal Buck. Do you know Eddie?
Yeah. No, I know him. I just wondering.
It's very cool. He made this chart. I have it here. It was a little bit ago, actually. Maybe a week or two ago. Let me present.
Yeah, it's a pretty simple equation, Tanner.
Yeah, no, it is. But I think visualizing it is interesting too. So whenever you actually look at the blue lines versus the red lines, how many of these names would go into negatives just through 1% APY? And now this is not a foolproof plan or like a foolproof diagram. It doesn't involve a lot of really complex ideas. He just took the deposits, added 1% on them. It's a little bit more complex than that, because maybe you could get more deposits through 1%, or there would be a whole bunch of factors that would change. But remember, SoFi is at 4.5%. So 1% wouldn't even be the difference maker. It would be many percent more, maybe 3% to stifle off SoFi. And then in that point, not even the JP Morgans, not the Bank of Americas would even be in the positives. What do you think?
I think this is very interesting, bro. Like, if every bank had to even do, like, they do 0.0001%, if they had to do it just a little bit more and they go negative, that's insane. Like, and a lot of these people are buying the banks for the dividend as well, right? TFC has a nice 7.6% dividend. That's why they're getting some buyers at these lows that they're at.
And so I'd like to actually see all the numbers and back test the math.
Yeah. Yeah. And so what do the big banks actually do? Like what can they do? And now without just saying that nothing, man, we're going to win. Is there anything that we can honestly think about that potentially could be offered in a branch that could not be offered online that they could innovate on and gain new market share? Or
the legacy banks?
Sorry?
You're asking if can the legacy banks innovate on anything to get new market share?
How can legacy banks honestly stop SoFi from continuing to steal clients out from under them? Because to me, the way I'm looking at it is I'm just, okay, ETF, right? Perfect. Cut the dividend. But is that actually going to happen?
They can't.
No, they
can't do that.
Yeah, they can't do that. Bro, if TFC cut their dividend, that stock's going to like 15 bucks.
They can't do that. Like, the only reason that people buy a lot of these banks is for the dividend.
Yeah.
It's not for the growth.
Bro, and the dividend itself is only a little bit higher than what you can get risk-free from the treasury. So like,
well, hold on. In TFC, the big banks is under the risk-free rate.
Well,
Citi's the only one that even comes close.
100%. That's another point. So it's even worse if they got rid of that. So essentially, we're saying this is SoFi's market to really just go after, because this is the prime opportunity for bigger banks to be struggling in a high interest rate environment.
I mean, we're getting into the IPO market where, you know, like these are big boy areas, and a lot of certain areas that we're going to start getting into with banking is going to really take like a lot of capital, where JP Morgan and the likes are like, what's it called? Sorry, more the investment banking side, like where Goldman Sachs and Morgan Stanley really take off. Like, these are opportunities for us as well. And retail is just a great way to sort of get started. Once we actually have capital, we have to remember this is a bank. like this is not like investing in a bicycle company like Peloton or some other just completely off-brand company, where then you have to wonder how good's their CFO and how good can they be with their financials. No, this is a bank. We know that they're good with financials. That's the only people they're hiring is people that are, sort of in that field in general. I don't know. I don't want to bring it back to my video I'm posting tomorrow, but friggin' that's where Noto comes from, is investment banking. Okay. I'm very, very excited for the future.
So what does JP Morgan pay right now on their deposits?
I think it's 0.01% on their regular savings account, their everyday savings. I don't think
Okay,
they ever increased
so-
it. Bank of America has increased it, but I don't think JP Morgan ever did.
All right. So real quick, they have 2.398 trillion in deposits. 1% increase on that would be
Okay, but
20
okay, wait. That's not the question that I thought you were asking. So it will be higher than the number I just said because of CDs, because of these sorts of things. So I don't know what the exact rate is. That's something that I'd have to check their stock.
Let me finish. Yes, without knowing what rate is CDs versus just money staying in checking or savings account. If you just said a 1% increase across the board, because that is what was implied, a 1% increase.
Yeah.
That would account to 23.99 billion of extra capital going out. JP Morgan in the trailing 12 months has made, call it 48 billion in net income.
That's crazy.
And they have
How much net income?
47.84 billion.
And they
In
lose
net
like
income?
28 billion from 1%.
Jeez.
So 2%
And-
puts them in negatives.
Hold on. They pay a dividend of $4.20 per share, and they have 2.9 billion shares outstanding. So they are paying out 12.2 billion per year in dividends.
Yeah.
So
That's
no,
why all the Chase customers out there, that's where your APY is going, by the way. Is not to the customer, it's going to the shareholder.
well,
Um,
it's going to a couple of places, but they have room. They don't have a lot of room. So could they go to 4%? Without knowing how much is in CDs versus cash or anything, it's hard to say. But if you just assume 1% on everything, it would be hard for them to get anywhere near SoFi. But at the same time, who knows if SoFi's rate is that impactful compared to these traditional banks having access to bonds and CDs. I think with SoFi, it's going after the younger demographic and building a better product that services a demographic that is being overlooked by their competitors. I think that's where the sweet spot for them is.
I don't think the APY is our selling point.
I don't think it is either.
If you look at,
I mean, it's a tool to get them in the door.
It doesn't hurt. It does not hurt, and it's definitely a strong point. But I don't think it's what's the driving factor.
But but it is though, right? Because it might not be the driving factor of the longevity or the lifetime value, but the APY is the carrot that's dangled in people's faces to say, "Hey, look, we are not the JP Morgan or the most established or largest bank in America. We're a small bank, but here's what we do offer in terms of benefits." Once you enter that ecosystem and you realize that it's actually way smoother and seamless for you, that paired with the switching costs, then the product sells itself or the ecosystem sells itself, but the APY is what gets you through the door.
I think the reason why we haven't competed with the Robinhoods of the world and all these things trying to go up to 4.9%, because we absolutely can. I think the main reason is that I think these marginal increases on APY has not shown a real improvement. They don't need to.
I would rather see them put the time and effort into business accounts.
And I hope they are. So
I cannot stress that enough. I would really, for them to get to the next level, they need to service small and middle-sized businesses.
Sure, but Steve, they're not mutually exclusive.
Yeah,
Like,
there's
APY is
departments
just
for both.
APY is a derivative of the.
No,
of the
I'm not saying that they are. I'm just saying for them to get to where they want to get to, they're going to have a full business arm, because there's so much capital out there that the large banks are overlooking. And these companies, there's a reason why business development corporations scoop up a ton of loans and do a ton of business in lower and middle market companies, because it's underserved by big traditional banks.
Yeah, and I do think that there's a huge, I think there's a huge amount of opportunity for going after customers that are with these traditional banks that are being just completely underserved, because they really are. And it's funny whenever you see the surveys, how many of the individuals just literally won't even like give a second thought to a fintech, right? Or a digital bank. It's crazy. It's over 50%. And yet, whenever you actually look at where do you do your banking for these traditional banks like JP Morgan, it's all iPhone, tablet, like 80+% are all doing it digitally right now anyway.
And
And
you
so
got
it's
to remember, a lot of people are ingrained. A lot of people have 10, 20, 30-year histories that they just don't want to be bothered with switching. And some people like that mentality of, if I ever need to go get a certified check, I can just walk into a branch. If I need a safety deposit box, I walk into a branch. Like, there are things that SoFi does not have. And I'm sure you can get a certified check from them, but you're going to have to get it mailed to you. It's not, you can just go to a branch if you need to go to a closing on a mortgage or something.
I had a freaking hard time with that buying this house, actually.
I
only use digital banks.
About it.
I only use digital banks, and they told me how much I needed to pay after all fees and everything like this, like the night before. And they were like, yeah, just go into your branch before you come in and then hand it to us the day of before noon. And I was like, I need 2-3 days. Like I needed it to mail to me. So not only did I've got about 3 different places that I bank with that I store money at, and the 2 wouldn't even do it. And the 1 said they were going to take 3 days.
And look, that's a thing that's very common. Even if you're buying a car, you may need a certified check if you're not walking in with cash on a down payment. A lot of dealerships may not take a personal check. Getting a mortgage or doing a closing, they're going to want a certified check. So if you need to wait to have that mailed to you, that's certainly a deterrent.
Well,
this is a deal breaker.
This is also, Steve, why I think it's so important for SoFi to be branching out first, not in the wealth management arm, although that is something on their road. It should be something on their roadmap in the future. But I think it's so much more important if they want to amplify new member additions from just everyday people, for them to get into lower barrier entry products like the Invest product, like SoFi Money, even Relay to some extent, because of the high switching costs for you to change your primary financial institution. I was out yesterday with coworkers, and one of them was looking to switch their bank, and literally, like, her dad was suggesting new banks to go with, and she's like, I honestly don't know anything about this. And so I was just thinking about that in that context, and a lot of people are like that. They don't care about what the APY is. They don't care about like what the actual savings rate or percentages, or they're just not financially inclined. That's not where their interests lie. And to them, the cost to switch is overwhelming. Like, to me, it's annoying, but I actually can do the math, and the cost benefit analysis weighs in my favor. Whereas for her, for example, it won't. And so having that low friction alternative, the low barrier to entry product, they can experience the ecosystem without having to make that full commitment of switching their entire financial institution and banking history.
Yeah, look, I agree with everything you said. There's multiple critical success factors that they need to implement over the next several years to get to where they want to go. That's certainly one of them.
Sure.
Like, there's multiple that they need to hit, and it's not all going to come at once. It's just a matter of how they put everything on the roadmap and how they scale.
Yeah, and I think products like Relay will take a bunch of those consumers that necessarily, because honestly, and we've spoken about this so much, and I'm so on Tevis's team. I'm so happy you said that. Just the idea that there's a bunch of these people that don't want complex things. I know that Steven, you really need Thinkorswim to trade, but like a lot of people just want robo advisors. You know what I mean?
I don't need it, but it's a free tool that is absolutely amazing.
But I am aware of that. But there are people that will see that and actually get more discouraged to invest because of how complicated it is, rather than how can I know that investing is good for me for the long term. How do I just play in this market? And I think it's why real estate is so, I guess, exciting for people, because it's just a set it and forget it. You know what I mean? Like, payments come out automatically. I'm winning over time.
People, you don't hear the horror stories about investing in real estate.
No,
the way that you hear about the wins.
Yeah. No, but you know what I mean. Being in the market long term is a win in real estate. I know there can be downsides, but
Okay, so we talked about the FedNow Galileo news. We talked about the deposits, and we talked about switching costs. One topic that I wanted to chat about, and obviously not spend a lot of time on because we've beaten that horse to death, is the student loan repayments. The payments are going to be starting on October 1st. Interest has already been accruing since September 1st. And today, actually, I saw this article on CNBC where the Biden administration was planning a second round of push for forgiveness. They're making it more targeted this time around. I mean, it's just an election play, most likely, but it's something that will be in the news circuits in 2024 more and more. And so I'm not sure if you guys had any thoughts on that in general.
I mean, dude, everyone's got to pay back their fucking student loans. There's no way we're getting out of this shit. Like, it's just Americans have to accept it.
Look, I don't want to get political. This is not a knock on either political party because they both suck at this point on this topic. Student debt needs to be overhauled completely. And the big problem, and I've said this, I'm going to go say it a little bit differently this time. I've alluded to it sometimes in my articles, and sometimes I've alluded to it on this, but it doesn't make sense that it is the only type of debt that does not get eliminated in bankruptcy court, which allows or incentivizes universities to give loans out to people that are going for degrees that have a low percentage chance of paying the loan back in a reasonable amount of time. And financial literacy needs to be at the forefront of what you are being taught in high school. I mean, some of this stuff that people are learning in high school is not relevant in the real world. And we need to do a better job. Our politicians need to do a better job of making sure that young adults are set up for success. And when you turn 18, you can sign your life away for a student loan and not really grasp the severity of what you're signing. And going to an expensive university, whether it's an Ivy League or not, and getting a degree in an area that you may not get a high-paying job, and you have a large loan payment for decades, may not be a great idea. Like, it is a real sticking point with me. And if they just did that one change, if they made it where it would get eliminated in bankruptcy court, maybe these universities wouldn't be incentivized just to give student loans to anybody, and they would actually have some type of system based on the merit of the degree and the likelihood of being able to afford repayments. Like, it's a huge problem. I mean, look, one of my good friends is a doctor, and it took him, I don't remember the exact amount of time, I want to say 16 or 17 years to pay everything back. Makes more money than most people. I mean, and if I said the amount of money the monthly payment was, I think it would shock people. But you think about what the average person makes or the average household. Student loan debt is crippling, and we need to do a better job at fixing this.
Preach.
So Biden or Trump?
It's neither. It's the whole
You have to pick one. You have to pick one.
overhauled because this is.
Yo, can we all just pick one right now? Who are you voting for? 2024.
Steve, who are you voting for?
He's going to quit the pod, guys.
Steve, just tell us.
Steve,
Are you a
everyone
Trumper?
wants
Or are you a
politics, Steve.
social
That's the favorite
communist?
Steve.
No, I want things fixed, not just grand.
Dude, you know who I'm voting for?
So neither?
Who are you voting for? I meant.
I'm voting for myself. Because honestly, I think if I was the president of the United States, I genuinely
What a
think
cop out.
I genuinely think I would solve most of the problems, bro. Like,
Can you imagine
Literally-
if Mitt was president of the U.S.?
oil supply,
The
bro.
amount of lives
I'd go to Saudi Arabia and I'd have a little talk with our prince. I'd be like, gotta get the oil up, my guy. Like, let's do this. Right?
Okay, this
Can
is
we
why
play a
you
game?
should
Can we
not.
play a game?
Hold on, stop.
Wait,
Stop.
I
This is
wanna
why
play a
you
game.
should not be president because of what you just said. We are the largest producing nation of oil and gas.
You got
So
him on- you
why
got
does
oil,
OPEC?
Steve.
Hold on. If that's the case, which I believe you,
Do
why
not
does
say if
OPEC?
that's the case. It's
Why
This
a-
is a true statement.
why do these Saudis that fucking stone women if they cheat on their husbands cutting oil? Why does that mess up our
Tanner,
oil prices?
I'm gonna have to mute him.
Can you? Put
No,
up,
it's true. It's true.
Henry,
That shit
can you
happens.
put
We're
up
at the scene.
Noir
That's why I'll be the
Desire's
president,
comment,
I'll
please?
actually say this shit.
Who?
I'm not gonna.
Noir Desire. Yeah, there you go. Amit, read that.
Mitt
for
can't
us.
even handle his hair, let alone no. But tell me why, if we're the largest producer of oil, why do we care about OPEC cutting production? Obviously, that fucks us, right? It's not good.
Hold on. Share my
See,
screen.
whatever chart
please.
you bring up is not gonna we got to get the
No,
oil.
this is from Trading Economics. This is the freaking data. We are ahead of Russia by
You got to zoom in.
3.5 million barrels per day. Saudi Arabia is the third largest producer in the world. And
Zoom.
if I click on Russia, they completely dropped off because of the current cuts. You look at Saudi Arabia, they did the same thing. We can go to the other OPEC plus nations. They're dropping. The US should be increasing quicker than we are. We're just back at the 2019 levels.
Okay, so at the end of the day, the Saudis still have to produce oil for oil prices to go lower, correct?
For oil prices to come down, we need more supply.
Okay, so I would go to the prince and I would get the job done. That's what I'm trying to say.
Okay, so maybe I'm wrong. On
I
this.
would
I'm not-
dude, that's such a good selling point. I would do it.
Dude,
I'm
I would
not-
literally
Well,
get the job done.
So Steve, maybe you can help me with this because I'm not as well versed on this. I don't think it's just a matter of supply though, because they're artificially holding back the reserves. Is that not the case? It's not just like, oh, we need to produce more.
So I know that they are reducing the amount they're drilling. I have not looked at their supply data. But yes, I do believe you're correct on that. I'd have to double check it. But the bottom line is, look, I'm pro renewables, I'm pro solar, I'm pro wind, I'm pro geothermal, because the reality is that we need more energy because we have another 2 billion people that are going to be on this planet over the next 2.5 decades. And the most likely scenario is eradicating coal and increasing natural gas, wind, and solar with oil plateauing. But fossil fuels are not just about energy for electricity or gasoline for cars. Plastics, fertilizers, they touch everything. Everything you use these are derivatives of them. And we need more of all energy sources. Nuclear would be amazing if we could increase the amount of nuclear. It's the one thing the French got right. Like, we should be increasing nuclear. The bottom line is the U.S. should be drilling more. There should not be a war on oil and gas, because this is a portion of what inflation is. Because when the price of a barrel increases, you make so many different things increase in the supply chain.
Okay, so Biden or Trump?
Okay, wait, let's play a game. Let's not say who we're going to vote for, and I'm Canadian anyway, I'm not voting, but let's talk about who we think the other person would vote for. What do you guys think, Steve? Who do you guys think Steve would vote for?
Yeah, put it in the chat. No,
No,
who do you think I would vote for? I'm curious what people think.
Amit and Tevis.
I think Steve would vote for Trump. I think Tevis is definitely voting for Trump.
I will tell you who.
I think Tanner's definitely voting for Trump.
I'll tell you what
No.
one of my
Are those the only two
tickets
options?
would be.
Yeah,
I would
Trump or
love to
Biden.
see-
No, it was not a Trump or Biden thing. I meant like,
No, I'm going to tell everybody who I would want to be president. I got a couple of tickets in my mind.
Oh
Barry
my god, you
Sternberg
texted me
and
about
Ray
this today. This is the
Dalio.
most unrealistic ticket of all time.
It's so unrealistic.
He texted me,
Barry
he was like, this is what
Sternberg
needs
and
to
Ray
happen.
Dalio. Don't care which one's president or VP.
Ray Dalio is a communist, bro.
Ray Dalio.
This dude fucking sucks China's dick like it's no tomorrow, bro. This man loves China. You want him to be the president?
We're just throwing out
Jamie
names out there.
Diamond and Barry Sternlich would love that ticket.
BlackRock executive. That's who he wants to be the president.
Gary Sternlich.
Goodness.
These are not even like candidates, man. Like
No, none of
Justin
them are
Timberlake
candidates.
and The Rock.
No.
What?
no, but okay. Okay,
You
Steve,
wish
tell me
me
about
I
luck
want
on
Dwayne The Rock
his
Johnson to be
interviews. This guy should have some type of position in the government making decisions. We need people that understand economics.
Dude, we need me as president. I fucking understand economics. I do a morning show every day. You know how much fucking economics I understand? I watch CNBC every morning. I would fucking fix every problem in like minutes. Like, it's not that complicated at all.
I mean, what's one of the biggest problems?
First of all, I would instruct through executive action every single institution in the United States, public or private, to implement Palantir software tomorrow. Okay, that will make me so much money. I will get so fucking rich that I will then take the money.
Impeached right there.
I would figure it out very
First
easily.
thing.
Hey, you sound like Obama with the with I enforce every company. You have to
First decision is a conflict of interest.
Have you ever looked at the U.S. debt clock?
Yes.
Yes, I have.
It is freaking scary.
Yes.
And
No, we're getting $2 billion a day in interest payments for our debt.
Throw up beat-ups.
No, I'm not throwing a beat. No, I'm not doing that.
He's like, well, yes, they're saying, have I fixed the problem with my startups yet? No, but I can start up the country as well. And it would.
So you have to fix audio before you fix the country.
Yeah, it would look. I just think you need someone who can actually get the job done and talk. And Biden can't talk. Trump can't talk.
You need young people, man. You need young people.
You need young people.
Tanner, bring my screen up. Like, this should scare everybody. Like, we need to really think about what we're doing. And the Fed,
just zoom to top left, because this is a eyesore. Just top left is
right here is the big thing. The interest on the debt is now over $700 billion a year that we're paying. It's almost as big as our defense budget. We're issuing long-term debt at such high rates because the Fed is holding rates higher for longer. This is insane. Absolutely.
What does Warren Buffett say about this?
I actually loved what he said about that.
What?
I actually loved what he said about that.
Do you remember, Steve, what he said about the debt problem?
E.T.'s comment. He said this looks like a Vegas slot machine.
That's
hilarious.
He said it doesn't matter at all.
No. Hold on.
A lot of people think the debt doesn't matter.
So, well, he also said, Tanner, that like the whole Munger idea of, show me the incentives and I'll show you the results. He basically said something to the effect of, and I might be misquoting this, but it was something around like, if the spending or the expenses are above a certain percentage, nobody's up for re-election. And he's like, okay, we'll make those the incentives, and then people will have a personal interest to spend less and to make sure that the books are balanced. And that's how you right-size the ship, essentially.
I thought you meant more of his quote of, he said, if you control the currency, then the debt doesn't matter. If you own the reserve currency and the printer, the number does not matter.
Yeah, but that's a big if, considering that we are on track to not be the world reserve currency.
That's a bunch of baloney.
It's not.
The US
it is a bunch of baloney, Steve.
The US dollar is used in more. The US dollar is used in more transactions worldwide than any other time in history. We just passed that.
Anna, do you know what the petrodollar is?
What?
Do you know what the petrodollar is?
Yeah, it's what people think that the dollar's backed on.
No.
Okay, maybe I'm misunderstanding.
The petrodollar is the currency that barrels of oil trades on. And it recently just started not only trading on the U.S. currency. That's a big problem.
What percent?
Listen, you start letting Saudi Arabia and China deal in other currencies on the petrodollar. That's the beginning of a slippery slope.
This is what I would tell the prince when I meet him. I'd be like, bro, you can't do this stuff. And I'd get the job done. I'm serious.
Well, look, the debt isn't a problem if you can service the debt. Our debt keeps going up and our interest keeps going up, and we are not increasing revenues nearly enough to keep up at this rate.
Isn't debt spending like more than military spending at this point?
We're like 90 billion away.
Yeah.
The defense budget's 794 billion. Interest on the debt, 709 billion.
Like, that's tell you everything you need to know.
John Blake in the chat said, this is the alternative asset weekly. We have not spoken about SoFi in a while.
The scary thing here is that the interest on the debt increases, like it doesn't increase linearly. It increases like exponentially, right? And so there is a finite amount of time until this thing becomes just ridiculous. And the fact that it's now one of the biggest expense line items it should be cause for concern. Military spending is what America has, like one of the things that America has been known for. It's the source of their hard power, right? to say, well, America has the biggest military in the world. Sure, they back that up through military spending. If the interest on their debt is the same amount as their military spending, that should be like sounding alarm bells in your head.
I mean, I agree with you, but at the end of the day, like I've always disagreed strongly with what Amit has said of like the idea that inflation and a weak dollar somehow depowers the military. Okay, the military is the strength, and if you guys actually look at it, it's like the next person in line is not even close. It's a tiny the military strength. And I do think that is a real back.
So last year,
but we're just still looking at the numbers. If we print money, what happened during COVID? What happened during COVID? How much did our money supply go up?
But the debt that we paid was $475 billion. It's now over $700 billion a year on the interest. That's a problem. In 1 year, that's a problem.
I'm aware, but you're acting like it comes with no benefits.
What are the benefits?
And what are the benefits? Please explain this to me.
Well, I'm not the
explain to me the benefits
that were actually that were
the economy is better now than it was in 2020.
Well, the growth in GDP is probably leveraged on the debt. Like if you're bringing on debt, you're going to be growing.
Yeah, but the debt almost doubled. The economy didn't almost double.
Sure. I mean, we went into a really bad time. What I'm saying is we could print out of this issue. It's not like there will be no doomsday that comes. That's the thing. Is like,
but you can't, Tanner, because the debt is doubling every year.
Currency. You can't just do that.
Yeah, but if I know that it's not healthy to do that, but I'm saying you absolutely can do that. Like that's why Warren Buffett says it's absolutely not a problem. It's like, no, that would not be a good old idea, but yeah, absolutely you can. You own the dollar.
Dude, Warren Buffett is like 95 and it's in his interest to say it's not a problem because he
I disagree.
Has like
I disagree. What is he looking for to pump?
Tanner, look, so think of it this way. Like if you had a
company,
company,
Warren Buffett trying to pump?
Think of it this way, Tanner. If you had a company
5 more years
and the actual revenue was increasing by like 6% a year or less, and the expenses were doubling every year, would you invest in that company?
You're all investing in that company.
I'm just saying.
You guys are all steel manning this issue without realizing you have all your money in the U.S. economy. Everyone in the chat that's saying, "Oh, Tanner's BSing," blah blah blah. You're all betting on that machine. So take your money elsewhere if you are honestly against me, or you do fricking believe what I'm saying.
Yeah, Bitcoin.
You know what I mean?
Throwable's comment is this is a Bitcoin ad coming up.
33 trillion in debt. Do you really think that we can print $33 trillion and repay everything without any consequences whatsoever?
We don't need to go we don't need to go to zero.
I would solve the debt problem as well. Like, this stuff is not complicated, okay? I've been reading a lot about economics, Wall Street Journal every morning. Like, this stuff is
can't even keep a straight face.
What's it called?
I will put a cap on how much money we can print, and that will reduce the money supply. And I will reduce some social programs, and we'll be good to go. That's it. And I'll make sure Palantir is in every organization so that.
When did we pass more debt than we had gross domestic product? When was that? That was recently, right? Like within the last 10 years?
Yeah, we need to bring up a chart. I don't know.
Our debt to GDP ratio, I think, is at 140 or something.
Yeah, 140. But whenever we passed 100%, people said that was the breaking point.
No, Tanner, I agree with you. I don't think U.S. debt is that big of an issue as Steve says it is. But
no,
obviously,
but here's the thing. Everyone thinks that I'm lying. Steve's the one lying. He's the one investing all his money in U.S. dollars, not pulling out anything, and then saying there's places to put your money and you're not doing it. So you guys are the ones that are confident. I'm the only one that's saying I'm confident on this ship, baby.
So Tanner, I do have investments outside of the U.S.
What percentage of your portfolio?
But
what percentage of your portfolio?
The interest on the debt.
What percentage of your portfolio?
2%? No, Tanner. He has Walmart de Mexico.
Yeah. You seem really concerned. Like,
dude, I'm concerned enough to whatever.
I can't. I want to be an American more than I want to be a Canadian. Everyone that's saying just move here, Your guys' border policy is stronger than you think.
I would take your 140% debt any day of the week.
Yeah,
I'll take your debt.
That's the thing, Tevis. It's like bash it. Like, of course, there's going to be
sure, but both things can be true at the same time.
America is the greatest country on the planet. I'm not questioning that. I'm just saying the interest on the debt's a problem.
It's not the best country in the world if they lose the reserve currency. So what side, like, place your bets. It's not happening.
Okay, so that is the end of SoFi Weekly. This was a very interesting episode. I'll be announcing my presidential campaign in around 2050.
Yeah,
so
everyone in the chat was talking shit, saying I was BSing until I said, "Where's your money?" And then everyone stopped talking.
Tanner, you're wrong on like everything you said.
How? If we're going into a collapse, where am I wrong?
We need to do a dedicated
episode. But like Tanner, if we go into a collapse and everything else goes into collapse, it's dominoes all the way down, because the U.S. is the reserve currency, and so for better or worse, like, you don't have any real other alternative other than cryptocurrency, which is a completely different game that you can play. But that's largely
we're forgetting about gold and silver.
Okay, well,
sure.
Back in the day, whenever the United States dollar was starting to come down, Canadian dollars had actually surpassed U.S. dollars. Was Canadian dollars not a smart place to put your money?
Back in the day, man, everything is backed on the U.S. dollar since 1979.
All right, I gotta go, guys. For Banter Weekly, Tanner, you control the stream though. So
no, I'll end it anyway because we're off SoFi anyway. But we'll have a alternative asset weekly. Everyone, Amit, Steve, Tevis. This has been the SoFi Weekly, but mainly just the investing politics.
It was a slow news week. We had to talk about some other stuff. So
slow news week. Tomorrow I got my video coming out on the history of Anthony Noto. If anyone wants to know about it, can't wait. It'll be a big one. All right. Love you all.
See you, everybody.
Bye, guys. See you next week.